Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Daybreak Weekend, our global look at the top stories in the coming week from our Daybreak anchors all around the world. And straight ahead on the program, a look at U.S. retail sales and what that data point may mean for Federal Reserve policy moving forward. I'm Tom Busby in New York.
I'm Stephen Carroll in London, where we're looking ahead to the UK's new Prime Minister hosting his neighbours for a meeting of the European political community.
And I'm Brian Curtis in Hong Kong. We look ahead to China's third plenum and whether it's steady as she goes on policy or surprising new developments.
That's all straight ahead on Bloomberg Daybreak Weekend on Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 106.1 Boston, Bloomberg 960 San Francisco, DAB Digital Radio London, Sirius XM 119, and around the world on BloombergRadio.com and via the Bloomberg Business app.
Good day to you. I'm Tom Busby, and we begin today's program with U.S. retail sales for June. That data out on Tuesday morning, 8:30 a.m. Wall Street time. And after more signs that inflation is cooling, how might that move the needle for Fed policy going forward? Well, for more, we're joined by Estelle O, U.S. economist with Bloomberg Economics. Well, Estelle, after 2 months in a row of pretty lackluster retail spending, what is your outlook for retail sales in June?
Tom, we're actually expecting another month of very weak retail sales for June. We're expecting the headline retail print to print at negative 0.3%. We're expecting the more important control group retail sales figure. That's the retail sales figure that strips out more of the volatile components of the retail sales data to print at 0%. So that's flat reading of retail sales. Now, the negative 0.3% headline retail sales reading we're expecting partially reflects a really sharp decline in auto sales in the month of June. Now, part of this is reflective of the fact that a lot of auto dealers in the month of June saw a cyber attack on the software that they use to process sales. So that affected the top line sales figures we saw in June for automobiles and may not actually be reflective of a sharp pullback in consumer spending, but that's in the data. So that's why we're forecasting a negative number in June. You mentioned that we've already had 2 consecutive months of weak retail sales prints. If our forecast for the June retail sales is correct, it's going to show that consumer spending is very much a slowing trend. And what that mainly is reflecting is that consumers are very much feeling the pressure from the Federal Reserve's high interest rates. The Fed is very much waiting to have more confidence that inflation is going towards its 2% target. And how consumer spending plays into that is that as we see consumers being stressed about by high interest rates, they're pulling back spending, and a lot of retailers are reacting to that by lowering prices.
Why don't we talk about the prices? Because we have seen airfares go down. We have seen used car prices go down. Auto insurance, of course, still, significantly higher. But we did see there is some hope for consumers. We saw a significant slowdown in inflation in June. Now, most of that on housing costs and rents, but that's a big part of household budgets. How will that impact people's spending?
As house prices come down, that's going to free up a little more disposable income for consumers. It's going to ease off the pressure on consumers, but overall, it's not going to change the fact that consumers are feeling a little less flushed compared to prior to the pandemic. So over the past 6 months, consumers have been spending more than their incomes have been growing. And as the labor market cools further, we're expecting consumers to feel a little more cautious about their spending, even if their other household costs are coming down.
But at least there is hope. There is hope, and a lot of talk now, especially after last week's inflation data, that in September, when we have a lot of back-to-school spending, we have a lot of new cars coming on dealership lots, that if there is a rate cut from the Fed, and it was a pretty dovish tone last week in annual testimony by Chairman Powell to Congress, that we really could, signal a real boost for the U.S. consumer through the end of this year, though.
So that's not how we're looking at things right now. So basically, we still have expectations for a Fed cut in September, but Usually, if you look at historical data, it takes time for consumers to feel confident again. If you look at the underlying drivers of consumer spending, consumers usually spend when they feel like their income can support it, and income growth is supported by a strong labor market. Right now, even if the Fed cuts in September, we're still expecting the labor market to slow, and consumers do not feel that support from a Fed cut until late 2025.
Okay, well, June retail sales data out Tuesday morning. That's ahead of Wall Street's opening bell. And our thanks to Estelle O, U.S. economist with Bloomberg Economics. All right, we move next to corporate earnings and streaming giant Netflix posting its latest quarterly results this Thursday. Key for investors, how the company's multiple growth levers like live comedy shows, live sporting events, its ad-supported tier, and subscription price hikes has impacted revenue. And for all that and more, we're joined by Geetha Raghunathan, Bloomberg intelligence analyst on U.S. media. Well, Geetha, what are you expecting to see from Netflix?
Tom, we are really expecting a blockbuster quarter. So if you just look at Netflix's performance over the past few months, I would say Netflix is firing on all cylinders. The company is in the strongest position that it's ever been. I think fundamentally, I think competitively, as well as financially. We continue to see very good subscriber momentum. Remember, they added something like 9.3 million subscribers in the first quarter. Obviously, we don't expect the same level of subscriber gains in the second quarter, but we think it's going to be fairly strong. We think it's going to be close to almost 6 million. And that's on the back of a lot of initiatives that the company has introduced. So they have this widespread password crackdown. And of course, they have this new ad-supported tier, which we think has been working really well for them.
And are the subscriber ads global? How are they doing in the U.S. and how are they doing elsewhere?
They're actually surprisingly strong, Tom, in the US. And remember, the US is a fairly saturated market, and we're still seeing pretty good growth. Remember, Netflix now actually at about 80 million subscribers actually has more subscribers than the traditional TV bundles. So Netflix has very much become the go-to option. And if you're thinking about TV viewing, Netflix really is the first choice and is the anchor, I would say, for most consumers when it comes to the living room. So we're seeing very good growth in the US, given that it's a saturated market, but obviously majority of the growth still comes from the international markets.
And let's talk about some of these newer initiatives from Netflix. Christmas Day may never be the same again, right? With this deal to stream live NFL games. And we saw this John Mulaney, Everyone's in L.A., 5 or 6 live shows, comedy shows. It's all about something Netflix has never done before, right? Advertising revenue.
Oh, absolutely. I mean, this is where I think investors are getting really excited about the future potential for this company, because we know subscription growth. We know they've really kind of delivered on subscription growth, but advertising is a whole new area for them, and they are really doing things to kind of really boost that revenue. So they've moved into live event sports programming in a huge way, obviously, with this NFL deal. Obviously, that's going to be something very attractive to advertisers, especially since the advertising subscription tier is priced very economically, very competitively at $7 a month. So we think a lot of people will sign on. And they're doing lots of different things, as you just pointed out. Obviously, the comedy shows. You had the Tom Brady roast. We have a Mike Tyson versus Jake Paul event that is coming up sometime in November. So they're doing a lot of things in terms of content, really kind of broadening their content appeal quite aggressively.
And when I turn on Netflix, which I have at home, I see a lot more international shows, and some of them have been tremendous hits here in the U.S., whatever language they're in. It's incredible how this growth is everywhere.
Oh, absolutely. And, that is translating into revenue growth, that is translating into subscriber growth, but most importantly, Tom, that is translating into engagement. And really, this is something that Netflix has been driving home now for so many quarters, so many years. They want to see people come to their platform and then never leave the platform, because that is how they can get to upsell so many more, new products, whether it's gaming, whether it's advertising. as they kind of expand into new categories. And we're seeing that engagement is very, very strong for Netflix. And of course, a lot of local language content is definitely helping. So just in the second quarter, we saw, of course, Bridgerton was the most watched show, but we also saw some of, their Korean language dramas, Queen of Tears, for instance, performing very, very well. And we're probably going to see more of that as Squid Game, the second season of Squid Game, comes out a little bit later this year.
Now, also Netflix, the success of all these shows, the success, the revenue streams they have, it has forced other streamers to look for partnerships just to compete even close to the level of Netflix.
Yeah, and that actually works so well for Netflix, Tom, because obviously originally they were investing very, very heavily in their own content, what we call original content, but now we're seeing a much more kind of balanced mix. And when they go for more licensed content, we see the effects in terms of the bottom line, because it's much cheaper. It's content that kind of travels well. It is time-tested content. And obviously, we're seeing free cash flow and operating profit get a huge boost from them being far more rational when it comes to content costs. So it's really kind of not only helping them kind of build their competitive moat, getting all these content titles from other producers of content, but it is also kind of helping them actually strengthen their bottom line.
And speaking of bottom line, those shares of Netflix up about 40% so far this year. Where do you think it heads for the remainder of 2024?
So I think, we're going to see continued momentum, and we're seeing that on the subscriber side. But I think the real big catalyst that could potentially happen in the second half of the year is a price increase. So we have not seen Netflix increase their prices on the standard tier, which is the $15.50 a standard product that they offer in the United States. We haven't seen them increase prices on that tier now for almost about 2 years. So they're definitely due for a price increase. And we've seen price increases across the board. We've seen it at Spotify. We've seen it, at Max. A lot of the rival services are increasing, prices. So just kind of given Netflix's low rates of churn, we definitely think that they are going to raise their prices very soon. And as we see, those price increases return to kind of the normal cadence, Netflix obviously then has ample room to sustain double-digit annual revenue growth and obviously huge levels of operating margin expansion.
Well, earnings for second quarter out this Thursday for Netflix. Our thanks to Geetha Raghunathan, Bloomberg intelligence analyst on U.S. media. Coming up on Bloomberg Daybreak Weekend, we look ahead to the UK's new Prime Minister hosting his neighbors for a meeting of the European political community. I'm Tom Busby, and this is Bloomberg. This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Tom Busby in New York. Up later in our program, we look ahead to a major policy meeting for top officials in China. But first, the European Political Community meeting takes place in the UK this week as Keir Starmer, the country's newly elected prime minister, brings dozens of high-level lawmakers from across Europe together discussing shared challenges like Russia's war against Ukraine, illegal immigration, even as many of those leaders face political challenges in their own countries. For more, let's go to London and bring in Bloomberg Daybreak Europe anchor Stephen Carroll.
Tom, in only his second week as Prime Minister, Keir Starmer will host European leaders at Plenum Palace for the fourth European Political Community meeting. The EPC is a forum for European Union countries and their neighbours to meet. Its twice-yearly gatherings are hosted alternately by a country that's in the EU and one that isn't. Choosing the Oxfordshire stately home as the backdrop for these discussions may itself be an indication of Starmer's intentions. Known as the birthplace of Winston Churchill, the Prime Minister may be hoping to draw inspiration from Britain's revered wartime leader. The plight of Ukraine is likely to be high on the agenda in discussions, especially following the Russian bombing of a children's hospital in Kyiv. But domestic tensions in other countries may overshadow these talks. In France, President Macron remains in a vulnerable position after his centrist alliance lost its relative majority in the country's recent parliamentary elections. In Germany, Chancellor Olaf Scholz's position has been weakened by a bruising defeat in last month's European Parliament vote. In fact, Keir Starmer cuts a rare figure in Europe as a leader with a clear mandate and majority ready to implement his agenda. The UK Prime Minister's approach to foreign and defence policy is something that we've been discussing with Jamie Shea, Associate Fellow at Chatham House and a former NATO official. He started by offering his thoughts on Keir Starmer's assertion that Ukraine can use British missiles to strike targets inside Russia.
Well, I think it's obviously good news for President Zelensky because clearly at the time when the Russians have been massing their forces just on their side of the border for their offensives, which have been taking place, as you can see, in the Donbass region up near Kharkiv, if Ukraine is going to really be able to defend itself, it has to be able to strike the Russian fuel dumps, the Russian storage facilities, their command and control, their communications, their headquarters on Russian territory to disrupt their offensive preparations. Ukraine's also had some success in attacking Russian airfields, taking out some Russian strategic bombers very far away from the Russian-Ukraine border, and also those Russian fuel and energy facilities that I was referring to earlier. So I think Keir Starmer has given President Zelensky a shot in the arm to the extent that obviously if Russia believes it has full license from Russia to attack anything it likes in Ukraine, the Ukrainians, cause of self-defense, have to be able to strike back against significant Russian military targets, but obviously not Russian civilian targets. I think Keir Starmer and other NATO leaders will draw a red line on that. The strikes have to be against genuine military targets.
Does this, though, on the question of striking military targets, open up divisions between the US and what France and the UK are now saying about the use of weapons to strike military targets inside Russia?
Well, since the beginning of the war, the Europeans have often been out ahead of the United States in many respects. For example, they decided, the UK, to provide tanks first, a long time before the United States decided to do the same. Similarly, with these long-range artillery, these cruise missiles, these Storm Shadows or the French Scalps that we're talking about now. The Europeans, with the Dutch and the Danes, were the first to cross the Rubicon when it came to F-16 aircraft, and the United States followed. So there is often in NATO a perception that it's always the Americans who are out in front and the Europeans sort of follow willy-nilly sooner or later. But this time it's the other way. But the fact of the matter is that Biden has also recently shown a little bit of flexibility, allowing the Ukrainians to use the long-range U.S. ATACMS artillery shells against the targets on Russian territory. But Biden has said that he doesn't want these to go too deep into Russia. He wants them really to be restricted to places like Crimea and just those Russian facilities over the border preparing for the offensive, which I was referring to earlier. So the United States is sort of halfway there, but it tends to sort of follow where the Europeans lead on this one.
Right. So the big takeaway so far is that these NATO allies have promised those 5 long-range air defense systems for Ukraine. But is NATO actually doing enough for Ukraine to win the war?
Well, maybe not enough in the past because the effort was largely left to individual allies acting bilaterally, signing bilateral agreements with Ukraine, like the one that Rishi Sunak signed very early on with Kiev, and basically giving the Ukrainians what they have in their stocks, not always what the Ukrainians need on a priority basis. But NATO is now stepping up. And I think the big headline from this Washington summit is that maybe too late, but still, NATO is now going to set up a command in Wiesbaden in Germany with about 800 NATO military planners, whose job it will be now to make this a much more coordinated, organised, planned effort. For example, Ukraine is currently operating about 140 different types of weapons systems supplied by the West. This doesn't make sense because it means 140 different supply chains, maintenance systems, and so on. It doesn't help the Ukrainian war effort. So I think what NATO is going to do now is organise this better in terms of what Ukraine needs, ensure that the delivery is more timely and more consistent, reduce these 140 different systems to say 20 or 30, which Ukraine can actually maintain and operate. And what NATO says also is that this effort is going to be a bridge to a future Ukrainian membership of the alliance, because it's not just going to be about the short-term provision of weapons to Ukraine, it's going to also be about the long-term restructuring of the Ukrainian army to look less like an old Soviet army and more like a modern Western army able to integrate into NATO in the fullness of time.
That was Jamie Shea from Chatham House speaking to Jemana Bersecci and me on Bloomberg Radio. So what's in store at this upcoming European Political Community meeting, and will Keir Starmer be able to charm his EU counterparts into a closer relationship? I've been discussing this and more with Bloomberg's UK politics editor Alex Morales. I started by asking him what Keir Starmer may be hoping to achieve during this event.
Well, mindful that he's just coming back from the NATO summit where he's met a lot of the same people. I mean, this really is about sort of meeting a lot of the European leaders who will be working with, he hopes, for the next 5 or 10 years, head to head, face to face, discussing some of the issues that they have in common, so, some of their points of divergence. And he really wants to change the tone in the way that the UK develops its relationship with the European Union and other more wider European countries.
How much of a test is this going to be for him in his new job as Prime Minister? It's his first time hosting such an international summit, and it's quite a lot of, as you say, friends and neighbours.
It's quite a lot of leaders, but it's also a sort of quite fairly informal summit. They don't have a set communique that they want to agree, so he doesn't have a piece of paper that he needs to achieve by the end of it. It really is just about, getting that time to speak face to face with other leaders and to discuss all these different issues that they need to address.
And this is one of the things that, of course, we know is a priority for the new Labour government. They want better ties with the European Union versus what there was under the Conservatives. Does this perhaps provide an opening for Keir Starmer to make progress on some key issues?
Yeah, I mean, definitely. I don't think we'll be getting any sort of firm agreements out of it. But clearly, so one of the big things he wants to talk about, we know that he's going there with this sort of proposal for a defence and security pact with the European Union. So yes, he wants to tighten those ties, but obviously there are a lot of issues like immigration. He wants to talk about, it's not free movement, but he wants to help, for instance, British performing artists to be able to tour more freely in Europe. There are all these sort of issues which have risen up since Brexit, where the relationship could just be a lot easier and better flowing.
And how much has there been sort of a tone shift, or could there be a tone shift from the other side of the channel, from the closer European partners towards a new government, given that it is a different party and sort of a fairly significant step on from Brexit as well?
I mean, it's a tough question because certainly Keir Starmer wants to set this different tone, and I'm sure his European counterparts will welcome that change of tone. But at the same time, Starmer's going to face the same issues that the outgoing Conservative government did, which is, for instance, one of the things he wants is a veterinary agreement to ease the flow of fresh foods across the borders. EU might still insist on the oversight of the European Court of Justice over the regulations underpinning that. So, there are these things which have come to be seen as toxic in the UK, which he will have to overcome and try and work out a compromise. And whether the EU is willing to give him more than they were willing to give the previous Conservative government is it's an open question.
An open question, indeed. And the review of the Trade and Cooperation Agreement, the post-Brexit trade deal, not due until 2026. So this would be sort of a speeding up of that process if they were able to make these side agreements. The European political community itself is sort of an interesting idea. It was something that was the brainchild of Emmanuel Macron in France. It's only been around since 2022, and it was sort of meant to bridge the gap in relations with countries like the UK, the nearest neighbours in the community as well. I mean, what are the other sorts of things that are expected to be under discussion at this event, apart from Keir Starmer trying to make new friends?
Well, I mean, so we've mentioned security and defence. That seems to be the main thing that the government wants to talk about. I would imagine immigration would come up. I'd be very surprised if it didn't, because it's a shared problem. You've got these sort of flows of immigrants moving across the continent, and in the UK's case, they come from France, but obviously they've got to France somehow through other countries. So immigration's a big topic of discussion. Ukraine is clearly a matter of huge importance to the continent, and how they cooperate on those things. And then shared problems like energy security, cybersecurity, climate change, all of those issues I'm sure will come up for discussion.
Yeah, and high-level discussions on that as well. This is also going to be a test of Keir Starmer's government's foreign policy too. It's their first, it's the second outing after the NATO summit for them to have a chance to talk about that, and then perhaps in a range of subjects broader than just defence and security as well. What else do we know is a priority for the new UK government when it comes to foreign policy?
Well, I would say that the main one is climate change that they want to change the tone on. So I think there's a perception, and I don't know how international this perception is, that the UK sort of stepped back a bit from its climate change policies under Rishi Sunak's administration, and the incoming Labour government want to change that, and so they want to say the UK is back at the table. You know, we're going to be leading on this for the next years and decades to come. So cutting emissions is obviously going to be one of the big things that he brings to.
Yeah, and this is also a chance too for, as you say, those more face-to-face conversations with some of those European counterparts, perhaps in, as you pointed out, a less structured way than we would have seen at the likes of the NATO summit. Blenheim Palace being chosen as the venue for this event as well. It's of course where the AI summit was too. Is this, a chance for those very chummy sort of conversations in corridors as well? Yeah,
I mean, it's obviously a nice sort of country house setting. I think it's also a very unsubtle message that security is big. It's Winston Churchill's birthplace. So that's perhaps a message to Putin of here are these 47 countries we're all discussing security and Ukraine and all these matters. This country has all this history attached to it.
Thanks to Bloomberg's UK politics editor Alex Morales. We'll have more coverage of the European Political Community meeting on Bloomberg Radio and television in the coming days. I'm Stephen Carroll in London. You can catch us every weekday morning here for Bloomberg Daybreak Europe, beginning at 6 a.m. in London and 1 a.m. on Wall Street. Tom?
Thank you, Stephen. And coming up on Bloomberg Daybreak Weekend, we look ahead to a major policy meeting for China's top officials. I'm Tom Busby, and this is Bloomberg. I'm Tom Busby in New York with your global look ahead at the top stories for investors in the coming week. Top officials in China gathering this week for a major policy meeting known as the Third Plenum. For more, let's get to Bloomberg Daybreak Asia hosts Brian Curtis and Doug Krisner.
Tom, the Third Plenum is a chance for China to enact far-reaching and pivotal policy actions. Think Deng Xiaoping's reform and opening up back in 1978. That's when China essentially opened up to the outside world.
This time, though, it's more likely the party re-embraces the recent policy guidelines of Xi Jinping and specifically his call for new productive forces.
At the core of that strategy are high-tech industries and high-end manufacturing. We're expecting to learn more about how China plans to cultivate new long-term growth drivers.
So, how does the government implement more stimulus? And how does it address the country's major challenges? Challenges that include a property crisis, access to foreign markets, and demographics.
We approached a number of leading economists and policy advisors for their thoughts on what comes next.
For the wish list, we think it's basically more like market-friendly or market-biases policies. For example, like if they could further elevation the role of the market for allocate resources, or to emphasize the importance of more supportive policies for the private sectors.
It's kind of a consensus right now. I think the major problem in the economy is low sentiment, a loss of animal spirit. So I think the third plenum, first and foremost, provided the government a rare opportunity to tackle the lack of confidence by rekindling the growth-friendly reforms.
There's not much of expectation going into the third plenum. If you look at the title of the third plenum, it has this continuation sort of in it, furthering reforms, but it's a continuation of things the party has already told us, whether it's on the technology front or some of the balancing of local government finances.
From the third plenum, I think enterprise business, they hope the government could actually start to reprioritize the economic growth, because over the past several years, the government actually come into a new policy regime where they try to balance multiple policy goals, right? So it's no longer just about economic growth, but also about financial stability, security, a bunch of other objectives. But on the other hand, I think the private sector, they are really looking for the government they could actually reprioritize economic growth, or at least step away from some of the regulatory tightening.
Grace Tam there from BNP Paribas Wealth Management, Ding Shuang at Standard Chartered Bank, Hui Shan from Goldman Sachs, and Xian Wang from the Vanguard Group. For more now, we're joined in our studios by Rebecca Chung-Wilkins, Bloomberg Asia Government and Politics correspondent, and Jenny Marsh, Bloomberg team leader on economics and government. Rebecca, let me go to you first. A common theme there is a continuation of Xi's productive forces, and then also hopes for improving prospects for the private sector. I'd say the former is likely. The latter, well, what, a bit of hope maybe?
I think there will be something for the markets. I would caution any sense of, reforms that go into reviving animal spirits, as one of those economists referenced. I think there is a desire to sort of use the private sector, use the entrepreneurial class to advance some of those key objectives under the so-called New Three. For example, high-tech domains, advanced technology. They want to be able to use the private sector to achieve those goals. I don't really see any signals that they want to actually unleash animal spirits, either among the entrepreneurial class or among markets, to sort of firepower that transition. And we also have seen over the years a sort of hesitance from Xi, warnings over quote-unquote barbaric capital, disorderly capital. There is quite still this emphasis on having capital markets be quite ordered and structured in China today.
So, Jenny, it would appear then if we do not get kind of a big bang initiative, there's going to be a lot of disappointment.
Yeah, and I think disappointment is sort of priced in. Leading up to the plenum, we've been hearing from investors and economists that they actually don't have high expectations for this. And there's a tradition actually for Chinese stocks to sort of react sort of quite mutedly after a third plenum. Like, it isn't something which historically has sort of really had like a big sort of positive effect afterwards. I think it's important to bear in mind that, she's going to be speaking from sort of a 30,000 foot view at this event, and the communique we get afterwards isn't going to have policy specifics, but it's going to have sort of language which gives you an idea of the kind of policies that she wants to see the bodies and organizations underneath him in the Central Committee sort of roll out in the months to come.
It's always the case in China, it seems, that social and political objectives come first. They're positioned ahead of business. That's actually probably true in most countries. However, the lines are drawn slightly differently in China. It seems much more palpable in China. Jenny, why?
I think because of the way that the government is set up. And, I think what's interesting about the third plenum is this is the first one of these sort of major, twice a decade events on reform since Xi consolidated power in 2022. Previously, when he went into these events, he was sort of having much more sort of balanced different factions. And, at the beginning, when he had his first plenum in 2013, he was sort of, the first among equals on the standing committee. He goes into this event having consolidated power, and now maybe what will be different about this event is that we will see what Xi's sort of raw vision for the economy is when he gets to do exactly what he wants to do. So I think, that's something that we might see differently because of how the balance of power in China has shifted even more in recent years towards Xi and sort of personalizing power around his rule.
Rebecca, what about measures to reduce things like inequality and tackle even the demographic challenges that we've been talking about with respect to China?
Yeah, I think that's a really important one that people are looking out for. We hear a lot of stories about people on the ground worried about sort of financial security, worried about job cuts, pay cuts. We hear anecdotes about, civil servants having to repay their bonuses that they were given from the past 5 years. So for some in China, prospects are looking pretty grim. And while incomes are still growing, they're growing at their slowest pace under Xi Jinping since the late 1980s. So the landscape has really changed. Quite fundamentally. I don't think there are enormous expectations, though, that we are going to see sort of some kind of grand reform. I do think there is some expectation we might see something in, for example, reform for the welfare system, something in the hukou registration system, something in public services to help local governments improve their public services. But in terms of sort of big bang changes that address sort of fundamental issues of social inequality, I think probably expectations are relatively muted. There's a really interesting survey released by CSIS as well as academics from Harvard and Stanford recently that show in 2023 essentially more people are attributing declines in sort of the ability to get rich, or in fact the reasons to get poor, in sort of economic structural reasons. So they put it down to things like you can get rich if you come from a wealthy family or if you have connections. That's a big change from, 2 decades ago when the emphasis was more on your talent, your ability and a high education. So we've seen the actual sort of perception of inequality and who's to blame really change over the past 30 years in China.
It's interesting because when we look at the private sector, we understand that there's huge competition between or among different players there. The competition is fierce. In artificial intelligence, for instance, we hear that some companies are just not going to be able to easily get ahead. Even a company like Baidu, which is one of the early movers in that space. And yet we hear when we talk to economists about trying to stimulate the private sector that people are calling for a more level playing field. How do we reconcile those two notions?
Well, I think there is a sort of contradiction here in terms of which part of the private sector are you really talking about vamping up, right? And I think the sort of era where entrepreneurs believe that, a whole wider range of opportunities could create wealth. And in fact, that was something desirable. That sentiment is still really dented by the fallout of the crackdown on the tech sector, for example, on the education sector. People who accrued enormous amounts of wealth were essentially targeted for that, right? And so that we are sort of seeing a shift away from that type of sort of entrepreneurialism into these very targeted areas that align with government objectives. And in some of those areas, things like AI, as well as EVs, more obviously those green tech areas, do receive support, extra additional support, policy support, in some cases funding support to grow.
Jenny, I'm curious, when we use the term new productive forces, how much of that is reliant on a change in the way China's been thinking about research and development? Does a lot more energy need to be applied into R&D?
Yeah, and I think this is an area where, Xi has clearly signaled that he wants China to sort of really focus its efforts on. And it's also sort of to do with this big sort of rivalry that China has now with the US. New productive forces is a big sort of catch-all term, but essentially what she really wants is for China to become a huge tech superpower, which can be self-sufficient if it needs to, but also lead the world in many of these technologies. And they've really been investing in that. They have a long way to catch up when it does come to some areas like AI. But then, you have seen how China has sort of steamed ahead in the EV sector and in terms of, the way that they have sort of led the world really in green technologies. I think the interesting thing is how that sort of then affects China's geopolitical relationships and standing in the world, because it seems that the farther they do pull ahead in these kind of areas, the more they sort of run into frictions with their major trading partners. So they have to also find sort of new markets for these kinds of innovations that they are seeking to find. And also it sort of comes back to this idea of all of the emphasis in the economy right now is on the supply side rather than trying to create domestic demand.
If you want freewheeling innovation, don't you sort of need more freedom? And also in the particular predicament that they're in now, we wonder whether it's an inflection point between this sort of step-by-step stimulation and something that approaches shock and awe.
I think that is a really interesting question, because the assumption is that if you want innovation, you need this sort of free kind of environment where people can sort of experiment and everything. But then, if you look at China and look at the green sectors where they have innovated, they've done all that within a Communist Party system, which has just been tightening over the past sort of 12 years. I think China actually is sort of the way it is innovating is kind of challenging some of those assumptions about the kind of environment that you do need to innovate. I mean, the Chinese model has been to sort of identify the areas you really want to grow, put a ton of government support behind it, let all of these companies sort of go out and pile in, and the strongest will survive and the weakest will die off, and you'll be left with really, really strong companies that can lead sectors. So it's kind of interesting to see China do that and sort of, confound some of those sort of stereotypes about what you do need to sort of innovate.
Thanks to the two of you for helping us preview the third plenum, which gets underway next week. Rebecca Chung-Wilkins, Bloomberg Asia government and politics correspondent, and Bloomberg's Jenny Marsh, team leader for Greater China EcoGov. I'm Doug Krisner, along with Brian Curtis in Hong Kong. You can catch us weekdays here for Bloomberg Daybreak Asia, beginning at 8 a.m. in Hong Kong, 8 p.m. on Wall Street. Tom?
Thank you, Doug, and thank you, Brian. And that does it for this edition of Bloomberg Daybreak Weekend. Join us again Monday morning at 5 a.m. Wall Street time for the latest on markets overseas and the news you need to start your day. I'm Tom Busby. Stay with us. Top stories and global business headlines are coming up right now.